Hello students, welcome to my channel Hans Commerce Tutorial for the lectures on commerce, accounts, finance and management. My suggestion to you, before watching the video, please go to the description below my video. You'll find a link there. Take a printout of the problems given in the link and keep it ready before watching the video so that you can be able to understand the problem, the solution and the explanation to get the maximum benefit from the lectures. Hello students. Now we'll start problem number 18. In the last session we have completed problem number 17. So far we have done the problems on starting problems we have done on preparation of profit and loss appropriation account and partners capital account under fixed capital method and fluctuating capital method. Then we have done the problems on admission of a partner. Now we are going to start the next topic called retirement of partner. Now this 18th problem I am reading now. The balance sheet of A, B and C sharing profits in proportion to capital. That means the profit sharing ratio is capital ratio. The capital ratio, you can see 20,000 is the capital of A, 15,000 B, 15,000 C. So 20 is to 15 is to 15, 4 is to 3 is to 3. That is the capital ratio and that will be the profit sharing ratio. Creditors, general reserve capitals, cash at banks, debtors, stock, machinery, fixture. On that date, C retires from the firm. And for this purpose, the goodwill of the firm has been valued at rupees 18,000. Stock has been revalued at 20,000, machinery 15,000, fixtures 10,000 and reserve of 3,000 for doubtful debts has been agreed to be created. Pass journal entries to give effect to the above and show the balance sheet of A and B after C's retirement. So we are required to pass the journal entries and the balance sheet of A and B after C's retirement. That is the thing we have to do. Now the adjustments are similar. The only thing is the goodwill of the firm is 18,000. We calculate what is the share of goodwill of the retiring partner. According to the profit sharing ratio, how much will be the goodwill of the retiring partner C. And we adjust that share of goodwill of retiring partner among the partner's capital account without raising the goodwill account. So first you can see the working note here. Goodwill of the firm is 18,000 given in the problem. Share of goodwill of retiring partner C, 18,000 into 3 by 10. 4 is to 3 is to 3 is the profit sharing ratio. So 3 by 10 is the share of the retiring partner C. So 18,000 into 3 by 10, 5,400. The share of goodwill of the retiring partner is 5,400. Now C's capital should be credited by 5,400. Then profit sharing ratio is the capital ratio. That is 20, 15, 15, 4 is to 3 is to 3. When C retires, the new ratio of A and B will be 4 is to 3. When C is retiring, the continuing partners are A and B. The ratio of A and B is 4 is to 3. Now, you can see here, therefore the goodwill of C will be adjusted in capital accounts of continuing partners A and B in the ratio of 4 is to 3. That means A, 5,400 into 4 by 7, 3086 and B, 5,400 into 3 by 7, 2314. The entry for adjustment of this goodwill is A's capital account debtor 3086, B's capital account debtor 2314, to C's capital 5,400. In this way, we adjust the share of goodwill of the retiring partner. Now, first of all, we'll begin with journal entries. The first journal entry, stock account debtor 5,000, fixtures account debtor 8,000 to revaluation 13,000. Stock and fixtures are to be increased, it is given in the problem, by 5,000 and 8,000. Secondly, revaluation account debtor to machinery account to reserve for doubtful debts. The narration you have to write yourself. I am explaining, I am dictating here. Being the stock and fixtures increased, being the value of stock and fixtures increased. Revaluation account debtor to machinery to reserve. Being the value of machinery decreased and reserve for doubtful debts created. So revaluation account debtor to machinery to reserve for doubtful debts. Now there is a general reserve. In the balance sheet, given general reserve is 10,000. This general reserve will be shared by all the partners in the profit sharing ratio 4:3:3. So 10,000 into 4 by 10, 4,000. 10,000 into 3 by 10, 3,000. 3,000. Being the general reserve shared by all the partners. Then A's capital account data 3086, B's capital account data 2314, to C's capital 5400. Just now I have explained the goodwill, the share of goodwill of the retiring partner is adjusted in the capital account of the partners. तो जो पार्टनर रिटायर हो रहा उसके कैपिटल अकाउंट को क्रेडिट करेंगे. C is retiring, so C's capital account is credited. We have to give 5,400 rupees goodwill to C. Whereas this 5,400 will be shared by A and B in the new profit sharing ratio. The new profit sharing ratio is 4:3. 4 by 7, 3 by. So 5,400 into 4 by 7. 5,400 into 3 by 7. You will get 30862314. This explanation I have written here in the working notes. Being the share of goodwill of retiring partner adjusted. Narration. Being the share of retiring partner adjusted in capital accounts. That's it. Now last is C's capital account data to C's loan account. This entry will pass after completing the capital account of partners. We have to find out how much amount is totally due to the retiring partner. That capital of retiring partner will be transferred to his loan account. This amount will get only after preparing partner's capital account. One point you can see here, there is neither profit nor loss on revaluation, because revaluation is credited by 13,000. You can see here, revaluation account is credited by 13,000 and revaluation account is debited by 13,000. So debit and credit of revaluation account are equal. So there is neither profit nor loss on revaluation. No profit, no loss. That's all. Now we'll make the capital account of partners. Partners' capital accounts. Now opening balance of A, B and C given in the problem, it is 20, 15, 15. 20,000, 15,000 and 15,000. This is the opening capital of all the partners. Now we'll post these entries in the capital account. Now here general reserve account data to A's capital, to B's capital, to C's capital. So all the partners' capital account should be credited by general reserve. So by general reserve, how much is the amount? 4,000, 3,000 and 3,000. This entry is posted. Now A's capital account data, B's capital account data to C's capital. So A and B should be debited and C should be credited. So first I am taking credit side of C by. The opposite of C's capital is A's capital and B's capital. So I am writing here A's capital by B's capital. In which column we have to take the amount? A's capital account data 3086. So A's capital 3086 and B's capital 2314. So I have credited C's capital account by 5,400. If you add up these two amounts, you'll get 5,400. So C's capital account is credited. Now A's capital and B's capital should be debited. So debit side to C's capital. In which column we have to take A and B? A 3086 and B it is 2314. Dash. In C column dash. Only A and B should be debited. So we have prepared the partner's capital account. Now we have to find out the total. The total of the credit side 24,000. You can see here 20,000 plus 4,000. 24,000. 24,000 minus 3086. The two balance carried down. Balancing figure. So 24,000 minus 3086 is 20,914. Here also by balance brought down. It is 20,914. This is the closing balance of partner A. This will appear in the balance sheet. Similarly, for B, 15,000 plus 3,000, 18,000 is the total on the credit side. Same 18,000. 18,000 minus 2314, you will get 15,686. 18,000 minus 2314, 15,686. This is the closing balance of B. 15,686. Now C. C's total on the credit side is 23,400. 23,400. Here also I am taking 23,400. But C is the retiring partner. C is the retiring partner. He is not continuing. In the balance sheet, retiring partner, C's capital account will not appear. The amount due to C is 23,400. So we have passed one entry, C's capital account debtor to C's loan account. So C's capital account is debited to C's loan account. 23,400. This is the balancing figure for C. A and B put a dash. So 23,400 should be given to, should be treated as a loan. This loan from C will appear on the liability side. Finished. Now we'll come to the balance sheet. The balance sheet will make, after referring the old balance sheet, by seeing the old balance sheet we can make the new. Creditors 30,000. We have not made any changes in creditors. So creditors will remain same. 30,000 creditors. General reserve will not appear because general reserve already we have transferred to all partners capital account. One more liability, C's loan account. C's loan is 23,400. Now C is not the partner. Now capital accounts. Capital accounts are only for A and B. What is the capital? 20,914. And B's capital 15,686. That's it. Liability side we have completed. Now we'll come to the asset side. See the old balance sheet. Cash at bank 13,000. Old balance sheet. Capital is 13,000. Now is there any transaction relating to cash at bank? No transaction at all. So same 13,000 will appear in the new balance sheet also. Similarly, next is debtors. Debtors are given in the old balance sheet 35,000. From this 35,000, a reserve for doubtful debts has been created here. Reserve for doubtful debts is 3,000. So out of this less reserve for doubtful debts 3,000. So it will become 32,000. Next is stock. The stock, old value of stock is 15,000. Now stock has been increased by 5,000. Stock has been increased by 5,000. So 15,000 plus 5,000. It will be 20,000. After stock, machinery. Machinery old value was given 25,000. Now here machinery value is decreased, credited by 10,000. Machinery value is credited by 10,000. It is decreased by 10,000. Minus 10,000. So it will become 15,000. Last one is fixtures. The old value of fixtures was 2,000. Is it increased or decreased? Here it is increased. डेबिट करने से बढ़ता, क्रेडिट करने से कम होता. तो यहां पर डेबिट कर दिया फिक्सचर्स 8,000, so plus 8,000. So 2,000 plus 8,000, it is 10,000. No other asset. Now we can find the total of the balance sheet. The balance sheet total is 90,000. Total of the balance sheet is 90,000. 13,000, 32,000, 20,000, 15,000, 10,000. That's it. So this is the first problem on retirement of a partner. Retirement of a partner. So take a pause of the screen and then copy it down the complete solution. So comparatively, I think if you compare admission with retirement, here retirement will have less adjustments and easily we can do it, less time is required. Whereas in admission we have more complications, more adjustments. Now we'll start the next problem, that is 19th one. See the 19th problem. Arun, Tarun and Varun were carrying on business in partnership, sharing profits in the ratio of 5:3:2 respectively. And on 31st December 2003, their balance sheet stood as follows. Arun, Tarun, Varun, capitals 1,60,000, 35,000. Total 1,95,000. Trade creditors, outstanding expenses. Now we don't have any general reserve or reserve fund like that. Outstanding expenses are 2,745. Freehold premises, furniture, fitting, stock, debtors, bills receivable, cash at bank. This is the balance sheet of Arun, Tarun and Varun. Profit sharing ratio 5:3:2. On the following terms, Varun retired. Varun retired on 31st December 2003. Freehold premises to be increased by 20,000. So entry will be freehold premises account debtor to revaluation. Furniture and fitting to be depreciated. So revaluation account debtor to furniture fitting. Provision for doubtful debts 5%. Revaluation account debtor to provision for doubtful debts. The agreed value of the firm's goodwill is 60,000. Firm's goodwill is 60,000. Now we have to find out how much is the share of goodwill of the retiring partner. The amount finally due to Varun be paid immediately. That means previous problem we have transferred the amount due to retiring partner to his loan account. But here in this problem it is saying immediately we are paying off the amount to Varun. Arun and Tarun bring 20,000 rupees each to facilitate payment. So there is a cash shortage. So continuing partners Arun and Tarun, they are bringing 20,000 rupees each. So entry will be bank account debtor to Arun's capital to Tarun's capital. 20, 40,000 rupees they are bringing. Arun and Tarun agreed to share profits in future in the ratio of 3:2 respectively. Here we are given the old ratio as well as new ratio. So we calculate the gaining ratio. Gaining ratio is new ratio minus old ratio. The goodwill will be distributed in gaining ratio. First of all, we will find out what is the share of goodwill of the retiring partner. अब retiring partner Varun है, total goodwill 60,000 है, और profit sharing ratio 5:3:2. So 2 by 10 into 60,000, that will come to 12,000. 60,000 into 2 by 10. This 12,000 rupees should be credited to Varun's capital. अब रिमेनिंग पार्टनर्स जो अरुण और तरुण है वो लोगों को डेबिट करना है. कौन से रेशियो में डेबिट करेंगे? न्यू रेशियो. From the above information, prepare necessary accounts and draw new balance sheet. We are not required to pass any journal entries in this problem. It is asking you to prepare the ledger accounts. So we will open revaluation account. We'll make a bank account and we'll make the capital accounts. Then we make the balance sheet. No journal entries are not required. But before that, we'll calculate the gaining ratio. In working notes, we calculate old ratio of Arun, Tarun and Varun is equal to 5:3:2. New ratio of Arun and Tarun is equal to, what is the new ratio given in the problem? 3:2. Therefore, we calculate gaining ratio for adjusting goodwill. Total goodwill of the firm is equal to 60,000 given in the problem. Total goodwill of the firm is 60,000. Now share of Varun is equal to 60,000 into 2 by 10 is equal to 12,000. 12,000 rupees is the share of goodwill of the retiring partner Varun. His account should be credited. Now gaining ratio is equal to new ratio minus old ratio. New ratio minus old ratio. This is the formula for gaining ratio. Now who will gain? Arun. What is the new ratio of Arun? 3 by 5. What is the old ratio of Arun? 5 by 10. 5 by 10 is equal to, now we take the LCM. 5 and 10, LCM is 10. 5 how many times cuts 10? 2 times. 2 3 is a 6. Minus 10 how many times cuts 10? 1 time. 1 5 is a 5. So 1 by 10. 1 by 10 is the gaining ratio of Arun. Similarly, Tarun. The new ratio of Tarun is 2 by 5. Old ratio of Tarun is 3 by 10. LCM, if we take 10, 5 how many times cuts 10? 2 times. 5 2s are 10. 2 2s are 4. 10 how many times cuts 10? 1 time. 1 3 is a 3. So 1 by 10. Therefore, gaining ratio one is to 1. Gaining ratio is 1 is to 1. That means the retiring partner's share of goodwill is 12,000. So retiring partner is Varun. So Varun's account should be credited by 12,000. 12,000 ka half, 6,000. The continuing partners are Arun and Tarun. So entry will be Arun's capital account debtor 6,000, Tarun's capital account debtor 6,000 to Varun's capital 12,000. Continuing partner equal share करेंगे क्योंकि 1 is to 1. The gaining ratio is 1 is to 1. So 6,000, 6,000, 12,000. These are the working notes. Now we'll make the revaluation account. This is problem number 19. One account will make revaluation account. Another account will make bank account. You have to take a pause of that working note and copy it down. Then we'll make the accounts of partners. Partners capital account. Arun, Tarun, Varun. By balance brought down. Opening balance I am taking now. What are the opening balances of Arun, Tarun, Varun? 1,60,000. And last one Varun is 35,000. These are the opening balances. Now we'll start the problem. Now, for freehold premises to be increased. Freehold premises to be increased. So freehold premises account debtor to revaluation. So by freehold premises. How much? 20%. 20% of 75,000 is 15,000. Secondly, furniture and fitting be depreciated. The debit side to furniture and fittings depreciated by 10%, 2255. 10% of 22,550 is 2255. Then provision for doubtful debts, revaluation account data to provision for doubtful debts. Provision for doubtful debts, it is 5% of debtors. So 5% of debtors, it comes to 1480, 1480. 5% of 29,600. Then over, that's it. Only these are the items. Now we'll find out the profit. Revaluation profit, balancing figure. So the total on the credit side is 15,000. 15,000 minus these two amounts, you are going to get 11,265. This is the revaluation profit. 11,265. It should be transferred to Arun, Varun and Tarun. Arun, Tarun and Varun. In old profit sharing ratio. The old profit sharing ratio is 5 by 10, 3 by 10, 2 by 10. So this amount into 5 by 10. You are going to get how much? 5633. Then 3380. Last one is 2252. Take a calculator and calculate now. 11,265 into 5 by 10. Old profit sharing ratio is 5:3:2. 5 plus 3, 8 plus 2, 10. So 11,265 into 5 by 10. You are going to get 5633. 11,265 into 3 by 10. You are going to get 3380. 11,265 into 2 by 10. You are getting 2252. There is no place, that's why I am showing it here. But these are the amounts distributed. Now you have to post this profit to the partner's capital account. The entry for revaluation profit is revaluation account data to all partners' capital account. Revaluation account data to all partners' capital account. Now we are creating by revaluation account profit. The profit is 5633, then 3380, last one 2252. That's it. So we have completed this one. Now it is given that goodwill, the share of goodwill of Varun is 12,000 rupees. 12,000 rupees. The entry is Arun's capital account data, Tarun's capital account data to Varun's capital. तो Varun's capital को क्रेडिट करना है by Arun's capital by Tarun's capital. 6,000. Now to Arun's capital account data, Tarun's capital account data to Varun's capital. तो वरुण के कैपिटल को क्रेडिट कर दिया 12,000. अब डेबिट करना है किसको? अरुण और तरुण को. To Varun's capital 6,000. तो अरुण को डेबिट कर दिया 6,000, तरुण को डेबिट कर दिया 6,000 और वरुण को क्रेडिट कर दिया 12,000. This is the adjustment entry for share of goodwill. Share of goodwill of the retiring partner. That's it. Now we have to find out the balance. The balance remaining in the accounts. Now one more thing. In order to make the payment to Varun, 20,000 rupees are bringing by Arun and Tarun. So entry will be bank account data to Arun's capital to Tarun's capital. तो बैंक को डेबिट करेंगे to Arun's capital to Tarun's capital.